Good morning, everyone. Andy Moss here, tradingadventures.com. We're going to take a stroll through the weekly charts after a dramatic week that started very near the all-time highs and sold off sharply. Here is the SPY, and the first thing I want to point out is look how long this Fibonacci extension level here at 1.618 has been a factor. We got very close to this back in October, late October, when we almost made when we did make a new high, and very near that level. And ever since then, it's been inching closer and closer and getting over a few times and not able to stay so far. So not a big deal, but just an interesting occurrence that I want to point out, and it's going to be relevant in a couple other places that we'll look at here shortly. But you can see the long lower shadow on this week's candle, and S&P sold off pretty hard down into the area of the lows from 2 weeks ago, into the lower half of the Bollinger Bands, and below that 20-week moving average there for a brief moment. Looking at the Qs, here's the similarities again. This is the extension level, and this one's been breached a few times, but it has provided pretty consistent resistance here since that October 27 high. And the Qs didn't rebound quite as strongly as the S&Ps did. Down to this anchor from the breakout move back on June 23rd, which it has tested a couple of times. And now we can see, does this continue to hold up? Is this going to be support again? So far, it looks like it is, but we'll have to see how the next weeks shake out. Here's the 4-week moving average, the little thin line sloping downward there now. The 10-week moving average is basically flat, and the 40-week is still coming up here. So RSI is still holding in the bullish area. Volume was very, very heavy this week, and it really looks just fine overall. The trend is clearly upwards, though it has flattened out now for several months, but this could still very well be a consolidation that gives way to the next move higher. DIA, the Dow 30 had a very strong week. Barely any sell-off from the open down to the rising 10-week moving average, and then through this consolidation area that we've been watching for several weeks and strongly into new high territory. And once again, here's an extension level just overhead. So when we saw that on SPYs and Qs, it became a factor. And now on DIA, we'll see, does that become a factor for the Dow stocks as well? RSI still very strong, and volume was heavy once again, and we can probably go add another anchor from this low. I think I had that on another chart, but just another reference point there. So the Dow 30 stocks very strong. Moving into the small caps, 4 weeks of pretty healthy consolidation here. They continue to be a leader and show relative strength versus the large cap indices. Dow with strength this week notwithstanding, but again, rising 10-week moving average, nice consolidation in the strong upper half of the rising Bollinger Bands. The RSI is strong, volume was heavy. And so here, all of these Fibonacci measurements have a 100 level at the November highs and the 0 level down here at the April lows. And so what's coming next for IWM is still a pretty long ways away. Up here around 290 is the next area for the small caps. Do they have room to get there? Can they get there quickly? And when they do, will it prove to be resistance? We'll never know until after the fact, of course, but just a level of interest overhead, not a price target, but it is something that could come into play, and I will keep on the chart. Bitcoin crushed. I don't have to repeat that. I've shared the charts. Twitter X has been full of Bitcoin bloodbath charts, and just really 3 strong weeks. It's interesting to me. Number one, note the volume, huge volume, well over twice the average, almost 3 times the average. RSI is oversold for the first time on this weekly chart, and if we scroll back, we've got to go a long way. Let me reset the chart here. We've got to go all the way back to this sell-off in June of 2022 to find an oversold reading on the weekly chart. And just for some more context here, That sell-off took it down from the highs 75%. That was the move on Bitcoin back over that time frame. So far in this time frame, it is down from the high of October. It's down 52%. And another little interesting fact here, round number trivia, $60,001 to the penny on Coinbase anyway. That was the low on Bitcoin before it started about a $10,000 bounce. So maybe this long lower shadow is early signs of reversal here. We'll have to wait and see. The dollar confirmed last week's reversal candle attempt, but it didn't get very far. It's a nice move, but right into the declining 4-week moving average. We still have plenty of potential resistance areas overhead. The Bollinger Bands are basically flat. We still have this anchor from the January 25 highs coming down there, and it's a nice bit of a relief rally, but no signs of meaningful change yet in the trend of the dollar. It's still just chopping around in this area below 99 and above about 96. Moving into the international stocks, the ACWX, this is the all cap world ex-US, so what I call the rest of the world. And this measurement is a little different. It's not on the same levels, but once again, we've got a Fibonacci level, extension level coming into play here. A couple of weeks of action on either side of that as RSI gets a little overheated here at 74. And volume has been very heavy for a couple of months now and starting to decline and come back near the average there. So that's what we see on the international stocks. China specifically, still just hanging around. Can't really get moving in either direction. We've got some long excursions here, higher and lower than always for the past 5 weeks anyway. Bring it right back to this slightly declining 10-week moving average. RSI still holding in the upper half, and volume just a little above average there. So nothing terribly exciting on the Chinese market. Aggregate bond index, AGG, more of the same. Sideways action, which is just fine. The bond market can be boring. That's what we want to see. If we start getting excitement in the bonds, that can be a signal of something changing below the surface there. And we're not seeing anything to indicate that for months now, several weeks. Treasuries looked pretty nasty earlier in the week also, but backing out on the weekly charts, we can get some bigger picture context here, and really not much of a move. Continuous sideways consolidation with slight drifts lower that revert back to the mean, and lots of messiness here on the chart around this $87 to $88 area on TLT. Don't look for anything too exciting there right at the moment. RSI just a little below the midpoint and hanging in pretty solid there with volume just kind of chugging along there near the average. High yield bonds, HYG, they continue to trade similar to stocks, not very far off recent highs. Sideways consolidation, holding above this high from September of 24, and just nothing exciting in the high yield markets, which is just fine. Commodities, on the other hand, I'm going to zoom out a bit on this GSG chart. We've been watching this one for a long time as it continuously found resistance here just over the $23 area and finally got a breakout here over the last several weeks, led, of course, by the precious metals. And we see a dramatic peak here, short term at least, with RSI getting a bit extended and now some reversion here and back to a sharply rising 4-week moving average on just really incredible volume. So that's what's going on in the overall commodities market. Drilling down a bit, oil, nice bounce here over the last several weeks, but no indication of a lasting trend change yet. We can't really call this a higher low. If anything, it was a bit of a lower low. This is not a higher high yet. We can draw in a bit of a range right here. That might be something we want to see. If you're looking for oil to have a meaningful shift into a reversal that has some potential, it needs to get above this about 65.5 area and then come back in and make a lower low. Maybe it can hold the rising 10-week moving average and then make another run, or this could be the resistance that holds and sends it back lower. Gold, really sharp move last week that found a near-term top and back down into the rising 10-week average for a bounce here, and what results in really 3 weeks of very high level consolidation here with some added volatility. And the same thing in silver. So no breakdown, a short-term top for sure, but nothing says that this couldn't be exceeded in the coming weeks, just like nothing says this can't go lower and test maybe the rising 40-week moving average here. It's just the action is, the range is expanding, volume has moderated a bit, and what's interesting to look at, I think, is you can look at this dip back on April, and silver went up 342% over a period of 42 weeks, and then it went down from the high to the recent low. That's nearly a 50% decline, 47 in 2 weeks. So added volatility there in silver. Now we go beneath the surface a little further and look at some of our alternative measures. Here's the S&P 500 on an equal weight basis. RSP is the symbol, and really strong breakout here on RSP. After several weeks of consolidation, we've given way to new highs. RSI just barely peeking its head above the 70 area, and volume once again very strong, and the equal weight index is making nice progress there. Here is the equal weight NASDAQ 100, QQEW is the symbol, and we can see some pretty persistent selling there. It did get a nice rebound off the lows. It's holding this high from back in December of 24, which has been tested several times over recent months. So no big breakdown there, but we do have a declining 10-week moving average. It is in the lower half of the RSI range, and it's testing this level this week, and we'll have to see if the buyers can continue to add fuel to the rebound, or is this level that gets tested and eventually broken to the downside. Looking at the growth stocks, more moderation, not a breakdown, still holding the rising 40-week. RSI is just below 50, but very near the midline, and we can look at this range. This is an area that has held a few times, and it's rounding over a bit here. Is it a top? We don't know. We'll never know till well after the fact, but it is a changing character over the last several weeks or months that is pushing prices lower, and it's got a pretty meaningful test here now. So can this level hold and send it back higher, or perhaps it goes a little below the 40-week, hits this anchor from the April lows, that is that level near 437 there on IWF. Switching to value names continue to be very strong, kind of like the RSP. We see a few weeks of consolidation here, giving ways to new highs. It is a little overbought here with RSI up at 76, and volume is just about average for the last several weeks there, but nice steady uptrend in the value names. Looking at consumer discretionary, here's a move we've seen several times already. A dip down to test a rising 40-week moving average, and then a bit of a rebound. RSI holding in the middle there, and heavier volume, but that is nothing terribly exciting on discretionary. Staples, on the other hand, incredible move, and this off of the lows back the beginning of the year. Now 15% in about 5 weeks there on staples. That's notable. That's something we've been pointing out consistently. When the defensive areas of the market are showing the strength, is that an indication of more defensive posturing? And it certainly could be. Something we want to be mindful of and keep an eye on. So looking at the relationship here between growth and value is just another way to show that value is definitely the preferred asset class out of those two for quite a while now. And Note that we've got an oversold RSI now. This is something I've analyzed several times in the past, that when RSI gets very overbought in this relationship, it has often produced a local top. And you can see that indicated here by the vertical lines and the highlighted areas up here on the RSI measure. It has happened pretty consistently. It's not always a huge drop. This one was pretty shallow, but over here, over here, over here, we've seen a meaningful shift. So now we're seeing that to the downside. We've got an oversold RSI. It's below 30, and price is nearing this anchor off of the 2023 low. And I think it's probably time to consider, at least be on the lookout for a reversion back to growth coming back in favor. The individual charts don't necessarily show that. We've got a support level here that we can watch and a rising 40 week, as we've already covered. But this is just another way to analyze that data, look at the relationship between those two asset classes and see if something might be coming. You don't just go in here and buy the dip, because dips can just keep on dipping. But I think it is a good idea to be on alert for a shift in this relationship over the next several weeks. Looking at the staples versus discretionary, I should say discretionary versus staples there. Again, drastic move here in staples, in the more defensive asset class. And we don't have what looks like a reliable signal from RSI. This one doesn't quite behave the same as the IWF versus ID. As a matter of fact, RSI is not oversold up here, still at 37, but this is a drastic move on high volume that could show some reversion. That's just a potential. Nothing there yet to indicate that that has started or we should be on lookout for, other than the fact that it's just so far below the now widening lower Bollinger Band there. So that's the relationship between discretionary and staples. Another potentially useful look at risk on versus more defensive. This is the high beta versus low volatility measures of the S&P. And safety got a little bit of a strong move down here early in the week, like most of the large cap indices, but it came back pretty heavily there. So high beta is not out of favor. It's just a consolidation, a little bit of a decline here over the last 5 or 6 weeks that takes it below a 10-week moving average and tests the center of the Bollinger Bands, which is also a 20-week moving average on this measure. But no meaningful change there. It's back in the area of these recent highs, which we saw in late 2025, and no huge developments there on high beta versus low volatility. Cap weighted versus equal weight. We already looked at the individual charts of those. Now looking at them against each other, we've gone from a nice breakout move that was pushing the Bollinger Bands higher now to a correction that is opening the band lower and below a 40-week moving average. We do have maybe a potential support area here off of these highs back in July of 24, but clearly another chart showing the favor of equal weight indices over the capitalization weighted indices. Here's the NASDAQ 100 with a similar measure. And interesting here that it's not following suit there. The cap weighted is still very much the regular old QQQ is very strong relative to the equal weight QQQ. So just a very strong difference there in those two relative strength measures. If we look at SPY versus QQQ, very strong move toward SPY, which is not surprising. We've been watching the Mag 7, the mega cap tech area take a bit of a hit, while lots of the other names like materials, industrials, that kind of thing, aerospace and defense have held up pretty well. So that's what that looks like, pitting those two against each other. And then one more look at this relationship. Here is the equal weight RSP versus the equal weight NASDAQ. And really pretty incredible move here on this relative strength chart, well above this area of recent highs, and very strong breakout move there with now overbought RSI. So I don't know if that means anything yet, but I just thought it was interesting to look at that relationship and the drastic change there over the last 2-3 months. U.S. stocks versus international stocks. I shared this a couple weeks ago and just indicated that it kind of looked like a mirror image. There's the logo backwards there to emphasize that, but it's still moving clearly in the direction of the international stocks as they continue to pick up steam. Maybe this is a support area. This is a level we've tested several times over the last few years, and it could hold here and come back up. However, notice the flat 40-week moving average, a declining 10-week moving average, and I'm sure you all see it, a potential here for a head and shoulders top. So as we consider this relationship between U.S. stocks and foreign stocks, this would indicate that we need to be on the lookout for continued strength in the foreign markets relative to the domestic markets. And we can see that also if we go back to the ACWX by itself, it's been very strong. So again, same data, just presented in a little different fashion to consider how things are doing relative to each other. Now, before we look at some sectors and a couple of the Mag 7 names, let's take a check on breadth. And here we have the S&P 500 weekly chart above and the percentage of stocks in that index above a 50 and 200-day moving average. And what we see is strength. These are holding up just fine in the face of sell-off this week and rebound. The numbers actually kept increasing, so that shows good participation beneath the surface. We've got most of the stocks above a 50 and 200-day moving average. So uptrends are still intact, as we know. And both of these measures right around 67.13 and 67.72 there on those. Now, if we look at the bullish percent indices, which I bring up every week, we can see here's the mid-level consolidation. Yes, it reversed back into a column of O's. And just to recap, a bullish percent index measures, in this case, on the S&P 500, this is the percentage of those index constituents that are showing a point and figure buy signal. I've got the explanation and the primer there on the site. You can read that if you need a refresher, but this just gives an indication of strength under the surface, and we're right about the midway line here. So a strong move higher in early 2026, followed by a bit of correction. No big surprise there. And the NASDAQ, on the other hand, had a strong move up in late 25 and then has given way to some downside here. So that shows us that we've only got 37% of NASDAQ 100 constituents showing a point and figure buy signal. And again, it's the same data. We already know the NASDAQ has been weaker, but this just tells us that about 2/3 of stocks out of that 100 or so are actually not on a point and figure buy signal there. So finally, the NYSE index, high level consolidation here. This is a bit of a move down, but very slight after this breakout move from late 25, early 26. So now we'll go back to our charts on TradingView. And here is the semiconductor index. And this one's interesting to me because we've seen a lot of mixed signals in the semiconductors. Some names continue to be very strong, while others have been incredibly weak, most notably NVIDIA. It has been dragging this index lower, while several other names, like good old-fashioned Intel, has been pretty strong. Software, absolutely wrecked. Just a really dramatic sell-off here from the October highs, down 32% as software names continue to feel pressure from other solutions. And we've got, this is kind of a sloppy area back on these dips, but that's how they've happened. This was also a very dramatic sell-off that resulted in kind of a V bottom here and more high-level consolidation. So who knows if this lasts a long time. The volume was massive this week, and RSI is pretty deeply oversold at this point on the software names. Mag 7 names, MAGS is the symbol here. Could it be a rounding top? Potentially. We've got a couple of excursions higher here that found resistance around $68, and now we're back into an area of previous lows that has been support. Will it be support again? Or do we come down here and test a rising 40 week? Do we test this anchor off the April lows? Nobody knows till after the fact, but we've also got this recent high from December 24 down at $58.69. So Mag 7 continued to struggle, didn't bounce as strong as the overall markets or some of the other large cap indices, and that's something we can continue to be on lookout for. Digging into those names individually, another mixed bag, kind of like the semiconductors. Apple having a very strong move back to the upside after nearly breaking down and testing the rising 40 here. So it's coming along pretty well. Amazon had earnings this week, and the reaction was not especially strong. So it's now below a slightly declining 10-week, still rising 40-week, and down testing this level, which was a high back on July of 24. Google has been the leader, and they had earnings this week. It sent it low very briefly, and on that day it established a low right near the opening prices at 9:30 and rose pretty soundly the rest of the day, and then moderated a bit on Friday. So it's putting this anchor off of this dip in mid-December. We have the anchor from the October dip just below, and it actually got back and closed above both that anchor and a slightly easing 10-week moving average there. RSI has been very overbought for months and months now. So a little consolidation up here around high levels is probably well deserved, and certainly not extraordinarily cautionary at this point, but something to note and be aware of. Meta, it's another mixed bag here. The anchor from the April lows is flat. The 40-week and 10-week are still slightly rising, but the 10-week has been below the 40-week now for couple months there. RSI right in the middle, volume erratic, and so it's still trying to figure it out and decide which direction it really wants to go there. Microsoft has been under a lot of pressure for many weeks or months now, and what's notable about this, it came down and touched this anchor from this low back on January of 23. We've seen this kind of action before in Microsoft, pushing the bands lower, testing this anchor, and then just giving a really solid rise. Does it happen again? I don't know, but we will watch this level and see. It provided a little bit of a bounce here this week for some relief. Does it hold next week and try to reverse? This RSI, as I pointed out, it's down below 30. Last time that happened, that was very near. Didn't mark, but it showed us after the fact, of course, that it was pretty close. Maybe we see that again. So I think it's worth at least being on the lookout for. NVIDIA, strong rebound here after the selling late in the week or midweek there for a late week rebound. Touched this rising 40 week, touched this gray shaded area here, which has marked some recent lows, but really not going anywhere. It's still flat for a long time. RSI is flat near the midpoint. Volume is average, nothing exciting on NVIDIA. But the fact that it was able to rebound once again strongly from this sell-off shows you that buyers are still present. They still want to get in on cheaper prices, and they're holding the price up pretty well so far. Tesla got a bit of relief this week also after testing a rising 40-week moving average. So nothing too dramatic there. We can see some price history back and around the 384s, and it hit that level again, and RSI is just barely starting to dip below the 50% level there. So that's what we see on Tesla. So what does it all mean? We just still kind of have a market that's, I don't want to call it a no man's land. That sounds ominous and dramatic, but it's just taking its time to figure out what next. On the big picture charts of these weekly time frames, we can see that a lot of these moves really aren't a big deal, even though it feels dramatic midweek when stocks are getting crushed for the third day in a row. In the bigger picture, it's not that substantial of a move. And these are the kinds of things that can happen in uptrends. We're going to see pullbacks, we're going to see consolidations. And right now, we still have to give the benefit of the doubt to the uptrend. The moving averages are rising. Dips continue to get bought. RSI is in the bullish upper half, and volume is fine. So at least on an index level there, the bulls are still in control, and this is still a consolidation in an uptrend. NASDAQ looks a little more susceptible to further downside, but really, once again, it held a key level, and it's just sideways for many, many weeks. We do have areas of weakness, of course. We do have continued strength and buying in the more defensive sectors. And again, something to be notable, something to be noted. It doesn't tell us what's going to happen next. Nothing does, but these are things that we're seeing show up that we want to pay attention to. And as I've written about several times already, the question you ask at this point, is it an indication of something bigger to come, or is this just a natural rotation feeding the bull market? And that is what you want to see. You don't want all the same things getting bought consistently over and over again and pushing them up to extreme levels like we see in silver and gold. That always leads to moderation at some point, and you got to put all these things together and consider all the pieces of the puzzle. So that's what we're trying to do here in the weekly chart, the big picture, using all the different time frames. Looking at the roadmap on a short term, going to the other end of the time frame spectrum here, what I've said on Thursday was, how does this change? What do we want to look for? And the answer is always the same. We want to see proven price action that can result in higher highs and higher lows. We started out Friday with a strong move that took us up to a higher high. It exceeded this level on S&P. It exceeded this level on the Qs. It is right into a declining 5-day moving average and a month-to-date anchored VWAP. Can it get above that? Can it establish a higher low and then go back and make another higher high? Those are the early indications that you can see a change in trend in the short term and that the buyers are resuming control. So we'll continue to watch for that on all four of these indices. DIA, I should say, that's not what we're watching for. This has already made new highs. And how does it react from here? Maybe it comes back and tests this breakout level, or maybe it doesn't quite get down that far. And looking at the futures, same data with a different lens. Again, higher highs. Can we see a higher low that holds prices and then starts driving this 5-day moving average higher, pulling these anchors higher? And Bitcoin, some progress here, but not quite a higher high on Bitcoin. We didn't make a higher high on Ethereum or Solana or Ripple. So they're all finding some reason to pause at declining 5-day moving averages or month-to-date anchors. And this possibly is a higher low. Very early indications here as we're on the weekend hours, but if this results in support that holds and sends prices back up over 72,000, 73,000, 74,000, then we have a higher high and maybe some early indications that the short-term trend is changing on Bitcoin. So just continue to take your trades, focus on your best quality setups, don't get chopped up in this sideways action, and be mindful of the increasing volatility. We didn't look at the VIX. It's actually been moving around quite a bit. But while it's not so demonstrated here on the VIX index, if you look at the individual names, you can see a lot of charts showing wider price action, a bit more chop. Maybe these things are a little harder to hold on to if you've got tight stops. And so that the strategy for that situation is smaller position sizes, wider stops, give them more room to breathe. Don't overtrade and try to take every setup. Focus on the true A+ setups and manage your risk. And we'll see what happens next.